Hello, and thank you for your interest in WebQuery from Informediate. Many of our customers believe that WebQuery is the simplest report writer for non-technical users they've ever encountered. And in today, I'd like to show you an example of how quickly and easily it is to create your own reports. As the name implies, WebQuery is a browser-based solution, and you can access it via many of the most popular browsers available today, including Internet Explorer, Firefox, Safari, and Google Chrome. Looking at the interface near the top of the screen, we see that there's two main modules in WebQuery, the Report Wizard and the Comparative Time. Today, I'd like to take a look at the Report Wizard. So to create a new report, I'm going to click on the Report Wizard button, and then I'm presented with a drop-down list of pre-configured data sets. Now we offer pre-configured data sets for many of the leading distribution packages available in the market. In this session, I'm going to show some examples from Epicore's Prophet 21. We offer the most extensive integration with Prophet 21 available in the industry today, with 35 pre-configured datasets and over 140 pre-built reports out of the box. When I talk about pre-configured datasets, what I'm really referring to is under the hood we've integrated with the database at the SQL level so that your non-technical users don't have to concern themselves with all the nuances of SQL or the details of the underlying transactions. They simply pick a data set and answer a few questions within that data set to quickly create their own reports. In today's example, I'd like to talk about the current inventory analysis. So I'll choose that data set and I'll hit the next button to proceed to create a new report. Most every distributor at one time or another is faced with the challenge of doing an inventory valuation report. When I talk about valuation, I mean assessing the carrying costs of their inventory using whatever costing method they find most appropriate in their business. So let's use that as the objective, and let's begin to create the report by answering some of the questions posed by these big black boxes down the middle. Now the first question regards what fields, in other words, what columns that we'd like to include on our report. So if we're talking about inventory valuation, let's begin with value itself, where value is the cost of that inventory, again using whatever costing method you prefer. Now in our case, value represents moving average cost, but if you use FIFO cost or standard cost, or we can accommodate whatever costing preference that you prefer. So for the most part, we're going to use value as our primary measure. Now, if I'm doing an inventory valuation report, I like to do that by supplier, because depending on who the supplier is, it might dictate our terms of whether we can exchange or whether there's a restocking fee or whatever for that inventory. So in essence, by just including these two fields, we can get the total dollar value of inventory summed at the supplier level. But what most people would find more useful is to include some performance measurements in the same report. So in our example, I'm going to pick a few of my favorite KPIs, so to speak, and one of which is turns. I'm going to hold down my control key so I can grab several columns quickly. In addition to turns, I want to include rolling 12-month summaries of sales and gross margin dollars and gross margin percent. And then I'd like to choose a couple other key metrics, including gross margin return on investment and excess inventory and excess percent. So again, I can hold down my control key to choose all those columns and move them over to my report. Now, if I'd like to change the order of how things appear, I can move these columns up and down simply by using the arrow keys. So in this particular case, I'd like to move the excess numbers right below value. I'd like to put gross margin return and investment above turn, and I'd like to move the sales dollars before margin. If we're going to look at that report now left to right, I hit the next button and we'll see by supplier, I want to see value at cost, excess value in dollars, percent, gross margin return on investment, turns, rolling 12 sales, rolling 12 gross margin, and rolling 12 gross margin percent. So when I talk about rolling 12, I'm talking about the rolling 12 months, often referred to as trailing 12 months. Now, I have the ability to apply filters to limit the results that qualify. And in this case, since we're doing an inventory valuation, let's use value then as a filter. So I can choose any combination of columns that I wish to filter on. In this case, we're going to use inventory value. And let's say we're only interested in those things where inventory value is greater than 0. So I can add those selection criteria, hit the add button, and move on to the next question. The next question allows me to change the sort order. So if it's me, I want to see where the most money is first, so I'm going to sort on value. The default would be value descending. Any measurements would default to value descending. Any categories, like supplier, would default to value ascending. If you're not clear, you can choose the specific case. So in this case, we want highest to lowest. If we want to limit the results, we can do that. In this case, we'll take them all. I'd love a grand total, so I'll simply choose that checkbox and I'll proceed. At this time, I'm not going to concern myself with subheadings and formats. When we're ready to go, we also have some choices in how we want to run this and present it on the user interface. The default is to show 100 rows per page right here in the HTML on the website. Or if we'd like, we can download the report to a CSV. If you're not familiar with that term, it stands for comma separated variable text file. Those will automatically open up in Excel in most computers by default. Or in another case, you may prefer to download this as a PDF, save the file, forward it to somebody else, and so forth. In this case, let's just run it online with 100 rows per page. We've got our answers back now, so let's take a quick look at this. Before we talk about our report results, let's just discuss briefly what happened there. WebQuery took a look at how you answered these questions and turned that into a SQL query and queried against your transaction database. Now, depending again what platform you use, we can either get real-time numbers or sometimes we'll calculate key performance measurements that don't exist in your transaction system. In this case, we can get the real-time inventory values, and we've included some calculations that were built using a number of procedures under the hood to calculate things like excess, gross margin return on investment, turns, and rolling 12-month numbers. So let's take a look at the specifics here. So in this example, it's easy to see that the largest supplier was this first row, supplier number 22656, with a little over 1 million in inventory. The next column shows me 322,000 in excess inventory. Now in this particular case, this distributor wanted us to calculate excess using the min-max, specifically the max. So let's say for a given item, if there was a quantity of 10 on hand and the max was 5, then that would mean we had 5 excess units. But we didn't ask for this by item on the report. So in this case, it rolled up all the items for each supplier, and this particular value represents the sum of all items that were last associated with that supplier. Now, from a financial point of view, 322,000 in excess, in other words, excess over what you anticipated the demand or optimum stocking level to be, would seem like a great deal of cash flow that could be redirected to other purposes. For most distributors, that kind of number would be indicative of some concern. When we look at that as a percentage of the total, 27% isn't quite as shocking. Now for the good news. My favorite metric for inventory evaluation is GMROI, which stands for Gross Margin Return on Investment. And we calculate GMROI by looking at the last 12 months of gross margin dollars and dividing that by the inventory value. So in other words, that 303 translates into they're taking $1 of inventory and turning that into $3.03 worth of margin. Most distributors would be very happy with that number, especially when you factor in 8 turns on 13 million in sales at a 27% clip. Moments ago, I was kind of shocked to see 322,000 in excess. But now that I understand that in the context of turning $1 into 3 on good turns at a good margin, there may be some merit in actually carrying some excess in this supplier, especially if that excess is in A and B type items that we know we're going to turn relatively soon. Perhaps it even allows the distributor to get better costs for these items and possibly even better turns. So, in the overall context, when we look at Gimroy and turns as prevailing indicator, so to speak, now it justifies carrying a little excess. Now, at some point in time, we should probably evaluate that supplier a little more closely, maybe down to the item level or the purchase class level, and look at the ABC codes to make sure that excess inventory is where we want it to be and not in things that have been in the warehouse for years. Aside from simple report creation, what we have here is a very simple method of top-down analytics where I can use prevailing indicators like GMROI in turns to evaluate the business in broad segments, and then depending on what I see, I might break it down further into the details to find the underlying root causes. Now let's just glance down that Gimroy column, and we see in third place this particular supplier has a Gimroy of 1.49. Now that sounds pretty good on the surface, getting a 49-cent return on my dollar. But in the world of distribution, remember that we're looking at gross margin dollars there. So we haven't yet factored the other operating costs of this business in creating that margin. And there's a pretty good chance that in most companies, after looking at their warehousing, picking, packing, shipping, selling costs, and delivery costs, that there's a good chance that most or all of that 49 cents of gross margin would be consumed. In reality, that's probably pretty close to break even. When we look at the excess percent, it's hard to justify 73% excess. So certainly it looks like that supplier is worthy of more scrutiny. If we look down a little further, we see some other good numbers, and then we get to a shocking number in Gimroy of 0.47. Again, without even factoring the other operating costs of the business, we can see that in essence this company is losing 53 cents on the dollar on that supplier. And again, how did we get there? Well, in the last 12 months, they had $75,000 in gross margin, yet they have more than twice that much tied up in cash in that inventory. So that's really not a good idea in practically any scenario. In my opinion, this is the kind of example that would demand immediate attention. So let's grab this supplier number, which we can then use as a filter to take a closer look at this inventory. Now, before we go on, let's talk briefly about saving and scheduling this report to run automatically so we can look at this at recurring intervals and share it with other important decision makers in our organization. Anytime that we want to reuse a report, all we have to do is give it a name. In this case, I might call it inventory by supplier. So I'll hit the save button, and by doing that, not only does it save the data, but more importantly, it saves all the report criteria so that we can rerun this report as often as we like, or we can schedule it to run automatically. Let's just proceed directly to scheduling. So I'm going to hit the schedule button, and it warns me that I might be overwriting something, and that's okay. And so, in fact, it looks like I had this report previously scheduled. And the last time I had it scheduled, I had it running every month on the third Friday. Now, I can run reports as often as every day, as infrequently as the first or last day of the month, or on a specific day of the month. Every week on a given day of the week, or on an oddball schedule. So let's say we want this report to go out every Monday. We can also choose a specific time of day. I'll go with 6 a.m. in this particular example. We also get the option to choose how you want to receive the results. We can have passive results where we save the files on the server and users can look at the results at their convenience, or we can automatically send out an email as a link, a CSV, or perhaps in this case a PDF file to a group of people. Then I can handpick individual users or groups. Perhaps I'd like to send this to the management team. Perhaps I'd like to send it to individual users. It's also possible to send this to external users. So We could share information with our suppliers if we wanted. Now notice that we have the ability to define user filters for each user. So we may set up a user filter at the administrative level that says when we send reports to the supplier, we're going to use that supplier's number as a key to the report. And once that filter's set up, whenever we want to do that, we'll just turn on the apply button. In this case, I don't really want to send the report to the supplier, so I'm going to remove that. If I want, I can show the other recipients who else is receiving the email and send a memo to be included. Once I'm ready, I hit the OK button to save my report. On this screen, I can see all the different reports I have scheduled, when they're scheduled, and so forth. If I want to see all my reports, whether they're scheduled or not, I'll simply click on my Saved Reports button, and these will show all the reports that I've personally created or that others have made available to me. You can see here that we save the report name, the data set that it was created, when it was created, last run, the number of times it's been run, modified, and if desired, comments to remind the users of whatever the motive was for creating the report. We can quickly find reports by typing in partial values. So in this case, we were looking for inventory by supplier, and we can retrieve that report again. As I mentioned earlier, we predefine and pre-deliver many built-in reports out of the box. In this specific case, we saw those alarming numbers for that particular supplier. So perhaps we'd like to break that down by the item level. So I can go to my saved report lists, and I can filter for all reports on the inventory data set, one of which is inventory value by item and location. I'll bring up that out of the box report, and we can now see that we can break this down by item ID, description, location. We'll see some of the same metrics we just saw in the last report, and then quite a few more that have more significance at the item level than they did at the supplier level. So all we need to do to take this predefined report and help us solve this business challenge is to use a filter to isolate the supplier that we found on the other report. So in this case, we'll filter by the supplier ID, and I will just paste in the value that we caught from the previous report. And now when we run this report, we'll only be looking at the items from that particular supplier. So let's take a look at the results for this supplier. Now remember, we've sorted this descending on inventory value, so those items with the most value would be first. In this particular example, it looks like we've got 7¼ inch circular carbide blades with 61,000 in inventory. Now we see 100% excess, which seems erroneous, but recall that this distributor would like us to use min-max to calculate that excess, and in this particular example there was no max set, therefore it thinks it's all excess. Now if we look over to the right, we can get a more accurate indication of what's really going on with this item, where we can see that there were 5,500 units shipped in the last 12 months, an average of just under 500 a month, and the item was ordered 564 times. So what you have here is a pretty fast moving item that averages just a little less than 500 units a month in demand. So if we take a look at what's currently on hand and available, realizing that their average usage is about 500 a month, you see at that rate it looks like they're carrying about 2 years worth of inventory. And I'm guessing that it's not a long supply chain for 7¼ inch blades. So in reality, instead of carrying $61,000 worth of these blades, about $5,000 would probably be more than adequate to meet the regular demand and provide 12 turns a year and a much stronger GMROI. Notice that the second line is actually exactly the same item at a different location. So aside from those two items at those two different locations, the rest of these units are relatively low dollar in comparison. If they can find a way to reduce the inventory in these particular blades, they could free almost $100,000 worth of cash flow very quickly. Now, if it were me, what I would do is I'd take this item number and I would copy that and go into the sales data set, and I could quickly find every customer who's ever bought that item, when was the last time they bought it, how many units they've bought, and frankly, if it were me, I'd be willing to sell this item at pretty much anything over my cost just to turn loose the cash flow. Another thing we can do is we can take that item number, go into the purchase order data set, find out who bought that, how often they bought it, when they bought it, and hopefully find out why they bought it, or at least establish some guidelines so that purchases more closely coincide with anticipated demand. Now, many of our customers and distributors are intrigued by this concept of using GIMROI as a prevailing metric. One of our customers asked us, could they just use GIMROI as a filter then? And certainly that would be easy enough to do. So we could easily change this filter. Instead of filtering by that supplier, we can filter by any of the measurements. In this example, we'll use GIMROI as the filter. And again, we don't necessarily know what break-even is on GIMROI without looking at other operating costs, but we do know that if GIMROI is less than 1, there's a fundamental problem. In other words, why bother carrying the inventory if you can't yield more than $1 of margin from it? So let's use that as a filter to test inventory across the board. So far, we've run all our reports online. We also have some other options here. My preference is that whenever I know that I'm going to have a long or wide report, I like to go to a PDF, whether I'm going to save the file or forward it to others or not. And my reason for doing so is the PDF is going to automatically take advantage of whatever screen real estate I have available. So first, WebQuery looks what we've asked for, and then it will automatically size that and lay it out as a PDF to take full advantage of whatever screen real estate I have available. One of the great features of the PDF is on the first page, by default, will show you a cover page if you like. If you don't like that, we can easily turn that off with a switch. In this case, we have 187 pages of results. And now we can scroll, and you can see that in this case, even despite all the columns in the width of that, WebQuery was automatically able to size this report to fit. Now, looking at these results, we can see that the worst offenders are actually the same carbide blades we just looked at a moment ago. Glancing a little deeper in this report, the item that bothers me the most of this is the fourth item here, where they've carrying $37,000 of inventory in this particular item. Again, we see 100% excess because no max was set. But again, if we look over to the right, we see 12-month usage was 53 units. It's a seasonal item that only sold 8 months in the year. Average usage, factoring the seasonality, is less than 7 units a month, and they're carrying 129 units, not quite 2 years worth of stock. But the most disturbing thing of all about this item is apparently there's 56 more units on purchase orders for another $16,000. It's hard to understand why they might want to order more of these items when they're already apparently grossly overstocked. So one of the things that we can do to stop these sort of situations from happening or catching them as soon as possible is to create an exception report where we don't want to see anything on PO with some minimum performance of GIMROI, turns, or excess. So let's close this report and create another exception report to look for those conditions. To do so, all we need to do is add another filter criteria. In this case, let's look for quantity on PO greater than 0. In other words, if GIMROI is less than 1, or turns is less than something, or excess is greater than something, then we certainly don't want to be ordering any more of it. So theoretically, this should be an empty report. In this particular case, there's quite a few items that met that criteria. Notice the quantities on POs, the value on POs, and offsetting that and contrasting that with poor GIMROI, turns, and excess numbers. We've just scratched the surface with a few of these examples, But hopefully you can see not only how easy it is for non-technical users to create their reports, but more importantly, how you can use this information for decision-making criteria and how you can create exception reports and isolate any areas of your business that are underperforming, or to the contrary, we can look for what's hot and what's yielding the best results. Thanks again for your interest. Please contact us at your convenience to dig deeper and show you some of the other ways that we can help your company benefit from WebQuery and our other reporting and analytics solutions. Thanks again for your interest.